Tony, what are Bitcoin treasury companies?
Well, a Bitcoin Treasury company is a publicly traded company that makes Bitcoin its primary corporate treasury asset. In other words, it's the main asset it owns. Holding it as a long-term store of value rather than using it for day-to-day operations, because Bitcoin's not ideal for making transactions. It's good just to hold, a bit like gold. These companies are different to traditional companies that may hold a small amount of Bitcoin just as a hedge, against inflation, for example. But instead, these Bitcoin treasury companies, their whole purpose is to buy more and more Bitcoin. So the way they do it, to increase their Bitcoin holdings, they raise money by issuing more shares in their company on public markets, stock markets, in other words, or they might issue something known as corporate bonds, which is debt, and other types of securities. That, therefore, they've got the money to then reinvest it in Bitcoin. And when you consider, they might typically pay, say, 5%, or even if they're very generous, they might pay 10% interest on these bonds that they issue. But Bitcoin, since 2009, I've calculated, has risen in value by an average of 139% a year. That doesn't mean it will continue at that rate in the future, but it's likely to continue growing for the foreseeable future at a much higher rate than any interest these firms would ever pay on the money they're borrowing. So that's Bitcoin treasury companies for you. Quite a clever idea. The problem you have with Bitcoin treasury companies, a lot of them have become overvalued. So in other words, the amount you pay for the shares is typically 100%, maybe 200% more than the actual value of all the Bitcoin they own. So that's a bit of a problem at the moment.